Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 12th of September. So despite a hotter than expected inflation number, the markets have gone to a new all-time high today. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and this has been a really good one for us because we can see that we've actually braced off the 2050 moving average that we talked about a couple of weeks ago, and we've really launched off that in the last couple of days. We can see here that we've got quite a bit of movement. I'll zoom it right out for you. This is where we were talking about the sort of 65 cent mark. We can see that we had some consolidation there, but most importantly, it was on the 20 and the 50 moving average, which were helping with the base of that move. And then of course, off it went. Once it got really cracking, you could see that it finally broke through that barrier at around that sort of 66.20 and has pushed on. Still a little bit further to go before it reaches its next real resistance point, but it's very important that it has broken through here because it's been quite a sticking point for it. If you go to the smaller time frames, probably the 4 hour would be the best one to have a look at. One of my favorite charts for intraday. You can see that we've got a really good solid series of higher highs and higher lows off that base. Okay, so the base that we were talking about is here, effectively a double bottom pattern with a little bit of overextension on one trough, pull back to the neckline, and then off it went, okay? And realistically, it was very, very strong trading. A lot of it was formed over the last couple of days, as you can see, but yeah, really, really good signs on the Aussie dollar. It's been a while. We've been expecting it for quite some time, but again, probably before the next real resistance, we're still a little bit away from that, but really good that it has actually broken through, and most importantly, came off this area here. Obviously a big move, pull back to a 20 and 50 moving average and a very, very strong roll reversal zone. These levels are very, very important. So it's really important to pay good attention to them when you are analyzing your trades and looking for moves. But yeah, it has done the job. I wouldn't be looking at any weakness right now. If it does pull back a little bit in the next day or even early next week back to around that 66.20, that will form more than likely another roll reversal zone again from the previous peak. So that could be another launching pad up to the long side. But yeah, really 67 cents is the target now where we're looking for that next move. All right, we'll move over to the dollar index now. Another really flat sort of week on the dollar index. This has been a real problem really for anyone wanting a breakout on the euro. The euro is obviously replicating this on the inverse side, but again, it held tough when it needed to hold tough at around that 97.40-ish area. We can see that we've got a very strong base here. We've got, effectively, it's been there for a long time without having to break it. If we do get past this level, yeah, 60 or 96.50-ish area is going to be the next very strong level of support. But after that, it could fall away quite significantly. So I think it's very, very important that it actually does hold up around this level. I don't really mind to see this consolidation happening. It's a little bit frustrating in the sense that we're not getting moves on the euro, but on the flip side of that, though, we're seeing a market that when it does eventually break through, there'll be no question that it has had a lot of time to consider the area. And that's really, really important moving forward for the next trend, because if it does happen to break up higher and we start to trade above that 99 again, we know that this area has been very well considered. So there's a very strong possibility that we can see a really, really big move that's going to net us some good returns. If it does break to the downside as well, it's the same story, really. It's had time to consider this area. It's been given every opportunity to actually consider it, and when it does eventually break through, the trend that goes with it is more than likely going to be significant, and I think that gives us more trading opportunities. So we're pretty happy about that as well, which is good. But again, not really much to report other than it needs to break out of those key zones before we actually start trading it. So while it stays stagnant, we'll just keep an eye on it, more watching and waiting than anything else. But moving averages again, still obviously flatlining. So we will wait and see until we get that big key break. All right, move over to the all-important S&P 500 now. And yeah, another all-time high formed here. Even though inflation data was a little bit higher than expected, look, it's anticipating a rate cut next week. There's no question about that. The market is all over that. It does, cause certainly a little bit of concern that we're expecting an interest rate cut to actually help propel the market, especially at all-time highs. It's not really ideal for a very healthy market, I wouldn't have thought, but the market's the market, and it does it does what it does, and we trade what we see. So look, all-time high again. I would not be getting involved personally at this level. I would be waiting for it to pull back. We know seasonality-wise, September is generally a weakish sort of month. I would think heaven help the market if they change their mind and don't do an interest rate cut next week. I think it could be a demolition of what we've seen over the last few weeks in terms of price rises. So we're anticipating that, obviously, and if it is even reduced to what is expected, then we might see some weakness, because again, we are in September, but nearly halfway through September as well. So that if the weakness doesn't come in soon, maybe this is going to be the September that bucks the trend over the last 7 or 8 years, and we don't see any weakness at all. But for now, I would be waiting for it to pull back to around that sort of 6,500 level before I'd be getting involved in a short-term potential scalp. I'd be certainly keeping them short-term right now. 20 moving average is obviously a target as well, but it may well catch up to that level over the next little bit, which would cause another level of support, which would give us a bit of a bounce up to the current highs that we're at now. That would be the trading zone between 6,500 and 6,590-ish. But a break of the 20 moving average, of course, and then we're going to be starting to look a little bit more dire to around that sort of 6,350. So pretty good trading on that part too. Just trade with a little bit of caution around here, that's all. Okay, let's go over to gold now. And we've seen an absolute breakthrough in gold as well. Really, really good trading here. I know a lot of people got this. So, and that move was anticipated. Once it broke out of that triangle, of course, we knew that we were in for a pretty good time in terms of the movement up. It's been very, very strong. The last 3 days of this week, you can see that we've had a shooting star, and we've also seen a little bit of an indecision in the last couple of days worth of trading, but that really helps consolidate the case for gold. Like, generally speaking, when you see a shooting star of that caliber after such an extraordinary move, you would normally see a fair bit of continued weakness from that. That has not happened, and the fact that that hasn't happened is testament to how strong gold actually is. So a few days of consolidation in this area, even if it pulls back a little bit, it's not really going to be, it wouldn't spell doom for the gold price. It's obviously translating to a very strong move. I would expect that this is waiting for an interest rate decision as well, just like the rest of the markets are. So waiting in anticipation, no question. So I would wait for a little bit of a pullback. I wouldn't mind seeing it come back, maybe a 38.2 fib, or even a pullback to the 20 moving average at some point in the next week or two would still be well and truly acceptable. And that would lead to a potential strong move off that level, and we see a series of higher highs and higher lows on a smaller time frame from an area like here. And now it's no longer an all-time high. We've got something to aim for, and I think that's really important. When you've got a precedent of where the market has been most recently, it's generally an easier trade. So that to me is a welcoming sign, really. If it pulls back to around anywhere around that sort of 35.30 to 35.50 area, even a little bit deeper to the 20 moving average, that would be more than okay. Because if we see any sort of support from that level and a series of higher highs and higher lows, then we can start aiming for the extreme levels that were reached again, which makes it a comfortable trade. I still wouldn't be looking at any shorting opportunities on gold right now. I think it's just a bit too strong to take the risk on that one. All right, and we'll move on to oil now. Oil has been an interesting one. It's playing the game from a technical standpoint. Look, clearly bouncing between the ranges at the 66 and the 62.50, which we've talked about quite a bit. Last week it was here, it's held up and then pushed up to the 20 moving average and the middle of the channel, just as importantly around that $64 mark. Very, very important in the context of technical analysis, because obviously it's bouncing between the zones that we expect it to bounce through. So if you are scalping it, it's a relatively easy scalp in terms of using the levels that are already predetermined here. It's fallen away from the 20 moving average, so not only has it pulled back up to the middle of the channel around that 64, it hit the 20 moving average and sold all the way back down to 62.50. This area is being precariously pushed hard every time it comes down. Like at the moment, this is the third touch of the 62.50. If we see a fail of the hold here, the $60 mark is more than likely going to be the target. If we see a daily close below here in the next day or two, I'd be looking at 60 as my new target for the short. But if we see a bit of a reversal from this level again, it needs to break past 64 before we get excited about a long, but realistically though, this little area is up for grabs, up to the 20 moving average. I'd be going for little short-term scalps on the long side if we see a little bit of momentum on the smaller time frames with higher highs and higher lows. So look, the market's being, it's obviously anticipating some pretty big information next week. But again, the inflation number was a little bit hot, so you've got to be mindful of that. The market is hoping more than anything else that it's going to get its way next week. So just trade for a little bit of caution in that regard. Well, I hope everyone's had a great week's trading. We've seen some really good levels hit again. Hopefully you're able to take advantage of some of those. Have a fantastic weekend, and I look forward to seeing you all next week.